What if I told you the US dollar, the currency you use every day, might not be as stable as you think? Silver and gold are quietly breaking records while most people aren't even paying attention. Imagine walking into a store tomorrow and the same amount of cash buys significantly less than it does today. That's why investors are quietly preparing and why metals like silver and gold are suddenly in the spotlight. Before we dive deeper, take a quick second to like this video and subscribe. On Iron Ledger, we simplify complex financial stories so you can understand how the global economy works and why these shifts matter for your money. The US dollar has been the world's reserve currency for decades, a symbol of stability and trust. But behind the scenes, enormous amounts of money are being created, debt levels are skyrocketing, and interest rates are fluctuating. These factors slowly erode the dollar's value, even if everyday prices don't reflect it immediately. Every new dollar created or borrowed reduces the purchasing power of existing dollars. Meanwhile, gold and silver are quietly climbing to new highs, almost like financial whispers most people don't notice. While everyone focuses on stocks or crypto, these traditional hedges are sending a clear signal that the financial system is under stress. Investors don't buy gold or silver because they're shiny. They buy them to protect real wealth, preserve purchasing power, and hedge against currency erosion. Historically, the relationship between the US dollar and precious metals has always been inverse. When the dollar weakens, gold and silver typically rise. These metals are finite with intrinsic value, unlike paper money that can be printed endlessly. Central banks around the world monitor these movements closely and adjust reserves to anticipate currency instability. Consider the US government's fiscal behavior over decades. Deficits have grown to historically unprecedented levels, quietly reducing the value of the dollar. Every new dollar printed slightly decreases the purchasing power of existing dollars. This compounding effect silently erodes wealth held in cash or dollar-denominated assets. Large investors, pension funds, and hedge funds notice these signals. They look for assets not directly tied to the dollar, with gold and silver serving this purpose perfectly. These metals act as insurance against currency collapse or devaluation. They help preserve purchasing power across decades. Industrial demand also plays a critical role in silver's rise. Unlike gold, silver has both industrial and monetary uses in electronics, solar panels, medical equipment, and advanced technologies. Global demand for silver is increasing rapidly, yet supply is constrained. Silver is often mined as a byproduct of other metals, so production doesn't scale easily to meet rising demand. This combination of industrial necessity and limited supply drives silver's value higher in ways that are often invisible to casual observers. Meanwhile, global financial instability adds pressure to both metals. Markets may appear calm on the surface, but underlying dynamics suggest stress. The US dollar dominates global finance, but its dominance carries inherent risks. Other nations are exploring alternatives, diversifying reserves, and increasing gold holdings to hedge against potential dollar weakness. These shifts happen quietly but have long-term implications for investors and everyday citizens. The more the dollar's purchasing power erodes, the more precious metals become a critical insurance policy. Inflation is another factor affecting purchasing power, and it cannot be ignored. Government statistics may show moderate inflation, but real-world costs often rise faster. Essentials like energy, food, housing, and healthcare become increasingly expensive. Gold and silver provide protection because their value holds when money loses power. Even small amounts of these metals can protect wealth in cash-heavy portfolios. On Iron Ledger, we track these trends because they are vital for anyone seeking to preserve wealth. Recognizing these signals early can make the difference between protecting or losing value. Monetary policy influences the dollar's strength. Interest rate changes, bond yields, and Federal Reserve actions all matter to investors and everyday citizens alike. Low rates combined with high debt encourage more money printing, which increases the risk of long-term devaluation. Gold and silver naturally become more attractive in this environment. Market psychology drives demand for safe haven assets. Fear, uncertainty, and anticipation encourage large institutions to quietly accumulate metals over months or years. This accumulation can push prices higher without making headlines. For everyday investors, subtle signs might be easy to miss, but the cumulative effect is significant. Technological and industrial demand further supports silver's rise. Electric vehicles, renewable energy projects, and digital infrastructure all require silver, adding industrial demand alongside its role as a hedge. Historical patterns provide crucial context. During monetary stress, hyperinflation, or currency devaluation, gold and silver consistently preserve value while paper currencies falter. Investors recognizing these patterns adjust portfolios proactively, protecting wealth before market crises fully emerge. This is not speculation, it's grounded in historical precedent and observed behavior. Understanding these dynamics is not about fear, it's about awareness. Currency manipulation, debt, and global demand all affect your money. Iron Ledger breaks down these complex topics, connecting the dots between global finance, currency policies, and precious metals. When you see these links, you understand why gold and silver quietly signal the health of the global economy. The US dollar may not collapse overnight, but trends indicate vulnerabilities. Debt levels are historic, deficits are rising, and global confidence in the currency is being tested. Precious metals offer a buffer, a way to preserve wealth even if traditional currencies falter. Monitoring their movement provides insight into broader economic health that affects corporations, investors, and everyday people alike. Rising metals extend beyond personal finance. Even small shifts in policy, trade, or supply chains ripple across economies, impacting purchasing power, investment returns, and industrial costs. Do you think the US dollar will maintain strength over the next decade, or is significant devaluation inevitable? Share your thoughts in the comments. Engaging in these discussions helps others understand trends and strengthens financial literacy within the community. If you found this breakdown useful, share this video and subscribe to Iron Ledger for more clear, actionable insights into the global economy. By understanding the interplay between currency, debt, and precious metals, you gain an advantage for the future. The more informed you are, the better equipped you'll be to protect wealth and make sound financial decisions. Silver and gold will continue quietly signaling key truths about the global economy. Paying attention now puts you ahead of the curve when financial realities shift. Even as the US dollar faces slow erosion, these metals provide stability that few other assets can offer. They serve as insurance against uncertainty, a hedge against inflation, and a tangible store of value. Large institutions, pension funds, and hedge funds have recognized this for decades. Now individuals are beginning to see the importance of including precious metals in their financial strategy. The global economy is complex, but the signals are clear. Rising demand, constrained supply, and monetary policy all point toward continued appreciation in gold and silver. Watching these movements on Iron Ledger allows you to understand not just the markets but also the health of global finance itself. Awareness leads to preparedness, and preparedness leads to financial resilience. In conclusion, the US dollar may remain dominant for some time, but vulnerabilities are growing. Precious metals quietly respond to these vulnerabilities, providing a hedge and a signal for informed investors. This story isn't alarmist, it's a realistic view of economic patterns that anyone can use to protect wealth. By staying informed, engaging with content like Iron Ledger, and considering how these shifts affect your financial decisions, you position yourself to navigate uncertainty successfully. Being aware of these trends allows you to take advantage of opportunities that others may overlook. The more attention you pay now, the better prepared you'll be for the coming changes in global finance.